having a quick wrap up post the European cash equity close. So for a lot of the guys who've been in the market throughout the day, a lot of this you've already kind of seen the news come out and the corresponding moves, but for those who haven't been in the market the entire day, looking at the charts at the moment, you can see equity futures still remaining in positive territory despite what was a bit of a dip in the US futures. You can see here in the S&P, particularly in the aftermath of some of the economic data, which we'll look at in a short while. But we've recovered since, and so we are positive, and as such then gold remains in negative territory. Gold here in the top right having been run into some resistance around 13.19, that being the pivot on the intraday levels, that holding some of the price action both overnight and then some of the recovery that we're seeing late morning. Elsewhere, euro dollar has traded negatively today, cable relatively unchanged. We'll have a look at some of the European data that also came out, and then most recently here we've had oil take a bit of a move to the upside as some of the largest refineries, in particular Marathon's Galveston Bay refinery, which has a capacity of around 450,000 barrels per day, is reported to have come back online, i.e. restarted. And so we've got a bit of a reverse of the pattern that we've had in the last several days, where if the refineries are coming back online, that can then reinitiate the demand for crude, and so that which has impacted WTI crude futures over the past few days is getting a bit of a reverse here late in the session, and we've moved back into positive territory here most recently. Just running through some of the highlights that we've had today. And to recap, you've had German inflation data this morning, the various German state level CPI is indicative of a minor uptick year on year from the prior month, but overall 1.8%, so confirming then this steady 0.1 upward trend that we've had over the last 4 months, really since the month of May of 2017. We've also had the economic confidence numbers coming out of the Eurozone early this morning, where Euro area economic confidence is now at its highest level since 2007. So despite obviously the ongoing fragility in the domestic economy here in the UK amid the uncertainty surrounding the Brexit talks, obviously the divisions which have been well apparent in the ruling Conservative Party itself, as well as its made up kind of coalition with the DUP. In Europe, things are looking fairly healthy at the moment, so just kind of validating the strength that we've had in manufacturing PMIs early in the last week, where of course remember we had the French number up at around 6.5-year highs, Germany up at around 2-month highs, while economic confidence and all measures, industrial, service and consumer, continue to move to the upside. And so this further then validating, if you like, the ECB's view that they hold the right hand, if you like, in their overall assumption that economic prospects, forward-looking, remain healthy enough that they can tighten policy, or at least start to communicate that that will be forthcoming in the period ahead. So that was the European side of things. Looking at the US economic data that we've had, well, this was the first real print that came out, and this was ADP employment change, came in at 237,000. So in fact then, as you can see by this chart, it's the highest reading we've had since March of 2017. 237,000 was way above market expectations of 183,000, and so this obviously does get or have some influence among market participants as towards their expectations then for the jobs report, which we'll get on Friday. Looking at the other data point, of course, of interest today was US second quarter, the preliminary reading, which came in at 3%. Now 3% was above expectations of 2.7, so a pretty firm reading, and consequently it did lead to dollar strength on the back of those numbers. And so if we just go back to both charts, then this is when we saw that original run lower here in the top left in euro dollar. We found a bit of a floor just above the 119 handle, and consequently cable also came under some pressure but failed to sustain the break of S1, which is just sub the 129 handle, and you can see cable here just flirting back on that top side resistance on the pivot level which has held the price for most of the intraday session. Equities reacted actually quite negative to the data. This has kind of been the play in the equity space, i.e. The data, the combination of ADP and GDP being so strong, only then sees a renewed interest in the probability of the Fed being able to hike interest rates going forward. And actually that did fluctuate in federal funds futures from 30% priced in for December up to 40%, only to have then just dropped back down to 30% again. So quite large fluctuations. Other things to be aware of, we of course have had the oil inventory data, so following on from the APIs here, you can see at the top which came out last night. These were the numbers that came out for the Department of Energy below, if I just transition my screens. So pretty similar sized drawdown in the headline figure. Cushing pretty similar as well. The gasoline number, if anything, was a slightly smaller build. Distillates a slightly larger build. The movement known reaction upon the data was pretty muted, as market participants are definitely more focused on the ongoing situation with the now tropical storm Harvey. Now, just to give you an idea as well, if I just bring up actually while I'm here, the National Hurricane Center, Harvey has hit land again. So despite moving offshore, this is what it looks like now, and this is the pattern and direction that we can expect over the forthcoming days. So originally it hit kind of this area here, slightly more left down the coastal line. It came offshore, and now it's come back on land. It's not quite the same ferocity as it is being downgraded to a tropical storm rather than the level 3 hurricane that it was originally when it hit the kind of San Antonio, Houston area. But over the coming days, through Thursday and into Friday, and then finally the weekend, you can see it's going to gradually move northeastern direction as it goes forward. So still quite a few things to be aware of. Quite a few commentary today saying it's going to be weeks or longer before the refineries are really fully back up and running. The actual devastation from a cost point of view is being up there now as one of the biggest natural disaster events to affect the US economy ever. And certainly the size has almost doubled in the amount that it's going to cost in order to pay out the insurance claims and so on. So Harvey still to be monitored, and as I say, actually the biggest oil move came not from the oil inventory data, and it's going to be that inventory data that people will be watching very closely in the weeks ahead, as then we can get a better precise idea of how much that it's impacted the gasoline situation, most notably, but also crude. But oil here, as I said, it's had another little look to the highs, and it's just found a bit of resistance around that level 46.59 of where we got to last night, just given the fact that one of the largest refineries, Marathon's Galveston Bay, has come back online, which has helped this move higher. Finally, Donald Trump, 24 hours after the market took some relief, and actually one of the best days recovery, i.e. a rally in the US equity market we've had in some time, on the back of a fairly measured response from Donald Trump to that ballistic missile test from North Korea that flew over the northern island of Hokkaido in Japan and landed in the Pacific Ocean. We were all slightly confounded by the fact that the White House were fairly conciliatory tone in fitting with their Chinese counterparts, only for then the opposite to happen this afternoon. 24 hours later, Donald Trump has changed tact once again. The tweet that he made is the one I'm showing you here. The US have been talking to North Korea and paying them extortion money for 25 years. Talking is not the answer! Exclamation mark. Nonetheless. And so this did actually see the dollar come off slightly, the most elevated level that we had over the time of the release of the strong economic data, and so we've managed to claw back off the lowest point in both Eurodollar and cable. Equity markets have also actually, in the US, in case the S&P and the Nasdaq, have come off that initial selling pressure that was seen when the US came in and on the data, because again, this kind of re-emergence of geopolitical tension is definitely going to act as potentially a headwind for the Fed to be able to act in a more hawkish, tightening manner going forward. And that's kind of been the read across from a policy play in terms of the US equity market. In terms of fixed income, it hasn't really reacted too much to the Trump tweet. If anything, the US 10-year seemed pretty flat at the moment. It's been confined to a fairly narrow range throughout the session. Okay, looking at tomorrow's calendar, just to give you a summary before then, I'll go through this in more detail in the briefing as per usual tomorrow morning. But overnight, from Asia, if you are going to be trading FX markets, certainly for the Aussie, maybe this could be interesting. You've got the manufacturing data PMIs coming out for China. So again, as I say, the Aussie might see some movement overnight, and we'll be looking at that when we come in tomorrow morning as the proxy for the Chinese economy. You've also got Japanese industrial output as well, the preliminary reading for the month of July. Going further forward though into the European and UK session, probably the main data point of the morning will be the German unemployment change and unemployment rate. That'll be just before 9 AM. Looking further forward, you've then got the inflation flash CPI measurement for August. Now this will be interesting given the fact that this is going to be closely followed by ECB members. Remember that kind of phrase that we heard only a month or two ago where Draghi was talking about this reflation idea, and that was a bit of a trigger point then for a catalyst that we're going to get the tightening cycle kind of underway, or at least the details towards ending of QE and what shape and form that would take, which has caused this kind of dramatic rise in the euro the last few weeks. So the inflation number will be key, so that'll be 10 AM tomorrow morning. You then get the various other job indicators, albeit from a lower tier like challenger layoffs. This is just supplements to things like ADP, which we've seen today, to formulate decision making over the jobs report we'll get from the Bureau of Labour Statistics on Friday. You've then got the core PCE data, personal income, consumption. These are all coming out tomorrow afternoon at 1:30 alongside your regular weekly jobless claims data. You've also got CAD GDP figures for any FX traders, Chicago PMI, so obviously we'll be keeping an eye on the employment component of that particular release as well. US housing data, pending homes indexes, kind of concludes the suite, if you like, new home sales existing and now pending. And then we've also got nat gas change for any energy traders interested in that release as well. So wrapping things off, Michael Saunders. Any sterling traders will know him particularly well because it is Saunders and Ian McCafferty who are the two remaining hawks on the Bank of England's Monetary Policy Committee, given the fact that Christine Forbes is no longer there. What we're interested to hear is how hawkish can Saunders be now that UK inflation has stabilised at basically 2.6%, which is off the peak of 2.9%, I believe, that we printed back in May. And that's pretty much it. So, going to leave it at that. Wish you all a pleasant evening, and I'll see you tomorrow morning. Thank you very much.